All right, what's up, YouTube? It's another episode of the Market Shenanigans. Week what? Week 25 now. So I have a couple of trades here, 4 trades, I believe. Yeah, and this has been a very insightful week for me because I sit down and I thought about some new improvements, new simplifications to my rules. Especially since lately I have been addressing this fizzling out momentum rule, and that brought a whole ocean of thoughts, to be honest. And I really think those are good thoughts. And I think I came up with some really, really nice ways to simplify my system and to filter out a lot of price action that I don't want to trade. And most importantly, to have very clearly defined rules that tell me exactly when certain things are valid or invalid. So I'm going to be talking about that. I think I also I don't have it here anymore, but I actually yesterday went over all of my trades from this year and I checked if I would have taken them or not. Let me take down the volume here a little bit on this. It's distracting. All right. So I went over all of these trades and I just checked in with my current rules and whether I would take them or not. And I literally went over every single trade. And without knowing the result or anything, I would just put a check mark or a cross, and then I would put it all together and see what my total EV would be. And holy fuck, man, it's this whole thing. If I had traded exactly the way I would want to, I would be up like 61R or something in a year, which is like 10R on average every month. And that it's just absolutely incredible, right? That's insane. I mean, these kind of numbers scaled up over, let's say, 5, 6, 7 years, that's just madness. So that was very helpful. Only took me like an hour. It has given me quite a bit of confidence in my system. And yeah, I want to talk a little bit about those trades today and about those rules. But first things first, let's just go over these trades and see what's up. So let's start with last week. I only took 2 trades here. I took this little trade on Polygon, which was really nice in my opinion. And then I took a trade on Mental, which I did not like, simply because, well, I entered once momentum fizzled already. And I think I came up with a really beautiful rule, very well-defined rule that tells me exactly when momentum is fizzled. So that's cool. And I put together this whole thing that will come into play as well, because thanks to this, I have actually identified one mistake that I used to do over and over, and I wasn't quite aware of it, which is very, very helpful. So let's go over here. Let's go to my Notion and let's go to week 25 over here. Okay, and first things first, let's read the instructions, because I have written down some new instructions here simply to read this every single week. These are like a couple of things that I want to keep in mind before I start trading. So I will actually read this every day. So first things first, right? I mean, I recently saw a video, a tweet from Anton, who said that we should be able to explain our system in 1 sentence. I said, I don't think that's very feasible, that's a bit extreme, but in a few sentences, I'm trying to follow big moves, daily, on the weekly, on the daily, that reaccumulate. And as they reaccumulate, I wait for reignition. That means that after reaccumulation, which by definition means lows liquidated, or at least price going sideways for some time and losing its momentum cycle, we then want to see an event called reignition. And reignition is simply, well, if I look at the 10-minute here, for example, as it reaccumulates and it goes sideways, it then breaks out strongly, which is an event that indicates that we might be continuing in the original direction, right? So once I have that reignition, that's my trigger to go to the lower time frame. I can either follow that move if it's not overextended, or if it is overextended, I can simply wait for it to pull back and get into the reignition of that, right? And I can take that fractally all the way down to the entry time frame. So reignition has to be present on every single time frame except for the super high context time frame, like the 1000, right? There, I just need to see ignition, basically. I just need to see the move out of a stage one, a big move. So it goes like this: big move, reaccumulation, reignition. Only then am I allowed to trade. A thing that I used to do in the past was that I would anticipate the reignition on a lower time frame. So basically what I would do is, here on the 10-minute, for example, as it would start breaking out over here, I would already go to, let's say, the 10-second, and I would be scalping this move over here. And that is incorrect. It's incorrect because at that point, I am anticipating reignition. It's not there yet. I need it to be there. Okay, so I need price to reignite and be there, even if it's not a candle close. At least if the candle is where my cursor is right now. If it's all the way up here, then it's all good. Then I can confidently say that, yes, this is reigniting now. It might still fail, of course. It's all a probability game. But at this point, we have reignited officially. And that is a huge piece of confirmation that is completely lacking if I start trading here on the 10-second with the anticipation of this going up. So that's something that I used to do a lot, and I wasn't quite aware of it. I would just scalp on the 10-second here, and very often what would happen is there would be a liquidation of all of these highs over here, and then it would dump on me. So this push would just be a liquidity grab for distribution or redistribution purposes, whatever you want to call it, and then it would dump. If I wait for the reignition to be quite big enough, if I let it print first, I will have some significant additional piece of confirmation that goes in my favor. In other words, if I trade over here, I am too early. And being too early is something that I have identified as a problem. So usually it would be a better idea to wait just a little bit longer, let it prove to me that it actually wants to go, and then get into the reaccumulation of that push. So that's something that I have been focusing on lately, and I think it's going to be super helpful for me. So I have a few more things here. What is this? Watch out for fizzled momentum after reignition. Okay, yeah, that's the mantle trade. I might actually change this a little bit because I have a new approach. The 100-minute has to have an MMB. Yes, absolutely. I traded this a couple of weeks ago, and this is a stage one for me. I don't want to be trading this kind of stuff. If I was ever to trade this, I would actually want to see the ignition and the pullback, and then the reignition of that pullback, and then I could trade. Well, I think last week or the week before, I talked about a perfect momentum cycle on NAS, and I couldn't find it. So I went ahead and I found it, and I just put it in here because this is picture perfect. I started trading this on the 10-minute. As you can see, this is like an ongoing momentum cycle. Nice push. It reaccumulates, creates a flippy, and then it reignites, right? This move over here is that ignition. It goes above, it pulls back, and now, technically, like, look at this. Wait, I'm actually gonna go in here. Now, it went up here. It liquidated all of these highs. And if it really wanted to just grab the liquidity, it has done that. And now it can fuck off lower, and I will not get a trade, right? But if it reaccumulates, it stays above the EMAs. It keeps its momentum and it doesn't fizzle, and it breaks out again above this high. I think the chances of that being continuation are much higher. So taking this trade was actually perfect. And the difference is that this is a 10-minute trade, right? As this was breaking out in the past, what I would do is, as price would move up here, I would already be on the 10-second, and I would be scalping this move up. And I think that's where I took a lot of mistakes and a lot of -1s, completely unnecessary. Whereas here, I actually took this as a 10-minute trade, and then I went to the 1 minute and 10 second and still scalped this move up. And I got another 2 trades in these MMBs over here on the 10 second. So I had 2 trades running at the same time, possibly even 3 running at the same time on the same instrument. Always if the previous trade is risk-free, right? And that's the whole difference. I can start stalking on the 10 second, either on the pullback or once it actually already moves higher. So trades in this area over here are by now filtered out. I don't want to trade over here. I want to let it break out, I want to let it pull back, and then I want to trade it. Not here. That's a mistake. Pay extra attention to the assets. Yeah, okay, that's an old one. And that's an old one as well. Okay. So here I am on week 25. And let's go to Monday. So I didn't watch too much this week. I watched NAS 100. Beautiful weekly move. Pulled back into the rising 1020. Started moving higher. Here we are on the daily. Just reaccumulated, just dropped. And here it kind of looks like reignition, right? It kind of looks like it could easily continue higher. I mean, there's a reaccumulation and there's quite big momentum showing up. I think on the lowers, we would see that there is some kind of stage 1 here and a reignition. So that's kind of nice. And JPN 225, similar story, but this looks even stronger. This is already moving to new highs. So definitely something to watch. Here's my watchlist screenshot. Yeah, I was watching the 10 minute. Here's the flippy. If it broke out higher, I would be looking to capture the upside over here. The expectation would be a new momentum cycle here. US 100 on the 10 minute looks absolutely terrible. I wanted to see it break down, rebuild itself, and maybe continue. And I also was watching a few stocks. I was watching ARM or whatever. This reaccumulated and reignited. So if we got some kind of pullback here, maybe I could get in like maybe I could get in on the 100, maybe even on the 10 minute, depending if the 10 minute was liquid enough and moving cleanly. And Micron, well, pullback, stage 1, just reignited right now. So I would want to see this pullback into the rising 1020 and maybe take a trade. So that's that. JPN looks decent, perhaps some tech stocks too, but I end up not taking anything. Cool. Let's go to Tuesday. Why does this look, it seems a bit different, doesn't it? Yeah, it absolutely does. Did I not? Oh, I see. I didn't tag it. Okay, makes sense. So let me close this. All right, so once again, was watching NAS. The day previous was just a tiny little ranging day. Nothing significant, but that doesn't change the context at all. It's still completely valid to trade this. Bet this is JPN. Yep. JPN, same story. Also went sideways a little bit. Definitely looking for continuations here. And I was also watching US oil. So US oil went up big time. Went sideways quite a bit. We can see that on the daily here. Definitely can draw a box around this with the wicks and everything. And as it broke down here, I thought, okay, yeah, this looks kind of bearish now. And I was ready to follow some shorts. Let's just put it that way. Some news. Nothing really important. I mean, latest news at 8:30 a.m. I wake up at 9. So whatever. Didn't even fill in any alarms. So here's my watch list. JPN, I looked at the 100. I wanted to see some kind of breakout. This is too much sideways. I'm definitely not looking for reignition here or anything. I'm just looking for a breakout into a new range. US 100 on the 10 minute here. Yeah, I think this looks decent. Like here it went sideways. There's a flippy. And here is the reignition. Depending on how the 100 looked here, I'm not entirely sure. But I think there was probably some kind of entry over here. And now I would stalk for more entries. Looks decent. Dell, yeah, sideways, now kind of accumulating. If it reignited over here, maybe I would follow. And SpaceX, I was watching SpaceX. Actually, over here, this happened quite late and I wasn't home. But there were 2 valid trades in here, which both yielded +5. Unfortunately, didn't manage to catch them, but that's fine. Some more stocks I watched. All right. NAS looks decent, JPN needs to break out, SpaceX looks decent, actually very liquid and possibly tradable on the 10-second, that surprised me. And US oil looks decent. And I have 2 trades here. So I traded NAS. Let's go take a look at it. I bet that's the trade over here. So we already know the weekly daily as always. And here we are on the 1000, right? So we have some kind of ongoing momentum cycle that now reaccumulates. And there's some kind of flippy over here. And price goes a little bit sideways, choppy, and here it reignites. Definitely beautiful reignition candle, right? Big body candle, big imbalance. I'm definitely watching for a trade here. So 100, we can see that it broke out over here. And this is a nice example of what I would talk about in the past. So this is the 100. Let's say that I would go to the 1 minute right over here as it was breaking out and I would start trading it. Yes, here maybe it would have worked out, but more often than not, what happens is there's a liquidity grab and it fucks off lower. And I can simply not trade that at all. I can instead wait for an MB, right? And that MB happens over here. This is where it pulls back to the rising 1020, and that's where I look for a trade. So here's the pullback. Very nice stage 2. Quite a nice orderly pullback. Creates a nice little flippy. Reignites, pulls back into the rising 1020. Again, I'm not trading over here. Or at least I think I'm not. And here, as it pulls back, I go to the 1 minute and I take a look. So looks like based on the EMAs that it was going up. And then it reaccumulated over here. All of these lows got liquidated. Beautiful. Some kind of flippy over here. Breaks out higher. And here I go to the 10-second and I take a look. And since this is a DMB, the breakout, it's an impulse, correction impulse, ICI, DMB, whatever you want to call it. I took this trade because this looks really, really nice. I think this trade was amazing. This fulfills all the rules. So here's the reignition and here's the pullback, right? Here's the pullback and continuation. This is perfect. This is exactly how I want to trade. So let's take a look at what happened. So I take the trade and somewhere over here, probably above the floating supply, I already go risk-free. And on the second closed candle, I go completely risk-free. And this goes to, well, it goes quite high. I think it goes to like, yeah, 4.36. And then it comes back to break even. Overall, beautiful trade. Love it. Was very patient. Didn't trade anything before that. I really, really like this one. This was perfect. Okay. So, how does this actually work? Right. Yeah, okay, let's do it like this. Perfect. Okay, and I guess I can delete this already, right? Yeah, I can delete this already. Okay, so that was the first trade. And then I had another trade here on US oil. So this is all inverted. It looks bullish, but it's actually bearish. So here what we have is some kind of impulse, stage 1, impulse, continuation, right? Here we have a beautiful momentum cycle that's moving very, very well. Just pulled back, moving higher, looks awesome. Here we are on the 10-minute. Some kind of stage 1 here, accumulation MB, whatever you want to call it, MB1, maybe MB2. I would say this is part of this push. This is probably MB2 for me. Even if it's MB3, it's definitely not overextended. This looks good. So here we are, big impulse, really nice impulse. Really nice orderly pullback, a bit deep, liquidation, so clearly a reaccumulation. It is a bit deep, but whenever this depth happens, I need to see some kind of stage 1, right? And that stage 1 happens over here. I can see the flippy, and I see the breakout over here. The breakout is on really nice, like volume, really good imbalance, EMA start rising, all of that, right? And here I wait for the pullback. I go to the 10-second and I'm like, okay, here it already liquidated everything. And if it wants to fuck off lower, it can. It could still do this, that it taps me in over here, does one more little liquidation and fucks off lower. If it does that, that's the risk of my setup. That's completely fine. That's expected. But right now, I didn't go here at the 10-second and start trading it. Like, I didn't take this entry, let's say. I let it reaccumulate, right? This is what I used to do in the past. I would get entered over here and instantly fucked off. Instead, I wait for a pullback here. And a pullback, a react, is often defined either by price going sideways or, which is even better, by liquidating some lows, which happens over here. Lows get liquidated, which allows me to set up the sell stop, buy stop, whatever, well, the trade over here, set it up, taps me in, chops around a little bit. Let's see how I managed. Got tapped in with a limit as it set up really quickly and I didn't catch it. Luckily, because of this little choppy over here, I actually get in. And I reduce risk over here. This is where I reduce risk to over here. And I still have 0.15 R running. And as it breaks above this high, that's when I go completely risk-free. I messed up the SL size a little bit. It should actually be less because it happened so quickly. I didn't properly assess SL size, so it was a bit wider than I wanted, but that's okay. It ended up being a 3.3 times ATR. I usually go for 2 times ATR plus spread, but this was so strong. It hit target anyway, so that was beautiful. I think this trade, once again, I think it was perfect. Very nice trade. I was with the momentum on every single time frame. I ruled out redistribution on the entry. Yeah, I love it. This was just so good. Okay, so that's that. No reflection, that's all. Cool. Let's go to Wednesday. Once again, same things. I watched NAS. So here we're pulling back a little bit. This is a shallow pullback, still completely valid to look for trades. JPN looks like it wants to continue higher, looks very good. US oil looks like it wants to continue lower, looks really good. Here's my watch list. JPN, once again on the 100, looking for a breakout higher, looking for that ignition. US 100, okay, so this is the 100. So here we had reignition that is now pulling back. Now, this is a reaccumulation, right? And I'm simply looking for reignition of that reaccumulation. I'm looking for that to pull back, and then I either buy stop that, or I will look for reignition of that smaller reaccumulation. Either one. Oil looks a little bit weird here. I don't know. This is a bit weird. I don't know what to think of this. This push. Nah, I would not look for a trade here, I think. I would look for a trade if it broke higher and continued. Because this stage 2 over here is weak as fuck. This does not allow me to look for a reaccumulation trade. So, if it broke out, yeah, maybe. And SpaceX, I simply marked up this high over here, and if price went above, I would start looking for a trade. But that didn't happen. So, US oil looks a bit overextended. Might want to wait for a new 100-minute cycle. And JPN broke out and looks good now. Okay. And I end up taking a trade on a stock, which I already say is a mistake. Okay. Oh, yeah, that's the Micron trade. Yeah. This trade is the reason why I came up with the refinement, by the way. Yeah, it is. So, MU looks really nice here on the 1000, right? We have a strong cycle, MB1, MB2, and now moving higher. This is perfect on the 1000. On the 100, we have the big push. We have a deep reaccumulation. I wait for a stage 1. That happens, and it reignites over here. It goes higher, pulls back, and has a deep pullback again. So I have a stage 1 over here, and I need to wait for a reignition. Once it reignites, I can start trading that reignition right away. Or, well, right away. I can start trading as it pulls back. Or I can wait for the bigger pullback. So here I am on the 10-minute. And on the 10-minute, I would really like to see an MB before I would trade this. I think I traded this on the 10-minute though, right? I think this is 10-minute entry. Yeah. And this is where I think I made the mistake. Because I would simply... yeah, so this is like trading the anticipation of the reignition, right? So over here, I got into it immediately, right? I got tapped in over here. I would really want to see something stronger. Like here, it's not reignited yet. It's kind of like it's peekabooing above. This is all part of a potential redistribution or a liquidity grab. I would like to wait for it to go higher and then reaccumulate. That's when I would get into the entry. Instead, I get in over here and I get tapped in and instantly fucked up. And I'm wondering, because I did something similar right here, right? Right here, yeah, on US oil, on the 1 minute. So what happened here, this is the same stuff. The 10 minute didn't reignite either. Just to put it into perspective. Interesting. Yeah, the 10 minute didn't reignite either. Yet I really like this trade. So what is going on here? So I let it break out and I let it pull back, right? At least on the 1 minute. So if that was the case over here, I let it break out and I let it pull back. Even here on the 1 minute. But wait, this is the equivalent. Okay, so the 10 minute is equivalent to the 100 minutes here. And here's the 1 minute, which does have a little pullback, which is nice. So I would need to have the 100 and I would need the 10 minute to pull back, right? And it kind of does. So let's remove this. So here, it already looks like it's reigniting actually. This already looks pretty decent. So if it pulls back here a little bit and taps me in, that actually doesn't look too bad. And I said it before that if it taps me in and instantly fucks me up, that's just part of my setup, right? That's just part of my setup, and that's the risk that I'm willing to take. So perhaps this is actually not such a big mistake, because this most definitely had its push all the way above. And you know what? Here it liquidated everything. It liquidated this, right? It liquidated this. It could have just liquidated and fucked off lower. But instead, it reaccumulated. It has some kind of flippy. It reignited. Pulled back one more time and tapped me in. Like, the more I look at it, the more I feel like this is actually not bad. This actually looks fairly decent, to be honest. Perfect area under 1000. Perfect area under 100, just as it reignited. It reignited, pulled back. It had a reaccumulation on the lower time frame. And then it taps me in. This isn't too bad. This is actually not as bad as I thought. I actually, so what do I write here? Took me a while to decide if I should or should not take this one. Decided to go for it. Looks like a decent reignition in the react. Yeah. Wouldn't it make more sense to expect distribution here? Should I have given it more time to prove itself by going higher and then get into the react? I think I was a bit too horny here. I understand what I'm saying, but is that really the case? Because as long as the 10 minute has a nice MB here, it seems kind of valid. Makes a lot of sense. Couple of thoughts here. And these are the thoughts that I actually got when I went for a walk and I thought about all of my trades. I had these two specific thoughts. First of all, we want to get into the react of the breakout. Do not trade the breakout itself. Okay, so what happened over here? Would it be possible to say that I'm trading the breakout itself here? Or am I trading the react of the breakout? Well, if I go to the 1 minute, this most definitely looks as a react, right? So perhaps what I was supposed to do is to wait on the 10 minutes to react, to like liquidate some kind of loss and whatnot. Perhaps that's what I want to do here. I just thought that this is already a good enough pullback, a react, so to say, an MB, that I can set up the buy stop here. And the next thought is, ask yourself, are you too early? Wouldn't it make sense to let it prove itself and then get into the react? Well, let's take a look at the US oil trade again. I traded it over here. Am I too early? Am I too early if it goes here? I think I'm just right. I think this is exact perfect timing, right? So if I did what I said I would want to do, by the way, I wonder why I didn't take this trade as well. Oh, probably because I wasn't home, right? Yes, okay. I already had to go to practice. Which day is this? Is this Wednesday? This is Wednesday, right? Yes, this is Wednesday. Makes sense. So I was already gone, but essentially what I'm saying is to not trade it here. Instead, let it break out, then react, which it does over here, and then reignite, pull back, and get entered again. And I would enter over here. Would that hit target? Let me actually go to here and see. Try to find this trade. Oops. Let me change this all to invert. Okay. So where is this trade? It was on Wednesday. Wednesday. Right. Wait, what? Oh, this is the Micron trade. My bad. So this is on Tuesday. Okay, Tuesday. So over here. Huh. Okay, let me take a look. Start new. Let's go here, for example. Is this the trade I took? Yes, it is. Okay. And here is the 1 minute trade. Okay, cool. So let me go back here, for example. All right. Boop, boop, boop. Whatever. Let's put this back. And let's see if this trade would have worked. So let's go into the actual bar that would have tapped me in, which is over here. Okay. So this would be a 1 minute trade. That means I would go for double ATR plus spread. So double ATR here is, so it's 200 and I think the spread is like 30. So I would go for like a 230-ish, something like this. And here, this would be what? This would be 1150. Yes. 1150, okay. And let's play it out and see. Okay, that would be instantly risk-free pretty much. And this would be the proper, so to say, trade. Okay, that would be definitely risk-free. And that would have tapped in and that would have worked as well. Okay, well, that's very cool. So now the question is it okay for me to already trade it over here? Or should I trade it over here? I mean, this trade over here is definitely perfection, right? I mean, there's no doubt about that. This is perfect. This is beautiful. But I think this makes sense as well. Especially if I let it break out first and then pull back. I'm gonna have to figure this out, man. Do I want to allow myself to trade these? Especially since this is an E. And on the E, I'm almost like looking for reasons to get in, right? I was even considering to allow myself to trade in a way where I would simply buy stop the reignition candle. The question then becomes, is this a reignition candle that I would buy stop? Well, probably not, right? I mean, this isn't strong enough. Neither is probably this. Is this strong enough as a reignition candle? Well, maybe once it closes, but this one didn't even close, right? I mean, I think this one just ended up being a wick and it fucked off lower. So, makes me, really makes me wonder. But yeah, the hires really like point to point to continuation here. So shouldn't I be looking for any possible excuse to get in on the lowers? I'm not sure. I'm not buy stopping this as a breakout. I'm waiting for it to at least pull back to rule out some kind of redistribution. But then I'm facing the risk of getting tapped in over here as part of that redistribution, as that last little liquidity hunt before fucking off. Just like it happened over here, right? Because it literally, if I go into the MU trade, Wednesday, okay. I go into the MU trade. I have it here on the 10-minute, but you can see it goes sideways. It literally does that one tiny little liquidation and it fucks off lower, right? That's the big risk of taking these. Whereas if I waited for real reignition and I allowed the market to prove to me that it really wants to go, and then once sellers showed up and started pushing the market lower, that's where I would start looking for my entries. That's where I would wait for the orderly pullback, for the nice wavy or flagging pullback, for the diagonal and the horizontal, for the flippy and all of those rules. Maybe that would have made much more sense, and that would be exactly what happened over here. That would be waiting for this, even though it liquidates the high, the floating supply, so to say, right, which is a little bit sus. But then it goes lower, it reaccumulates, and here it reignites, pulls back, stays above the EMAs, and provides the absolute perfect entry. This entry was indeed perfect. Tough to say. I think it's pretty clear, though, that this type of trade over here is different than this type of trade, right? Because this can still be a part of a redistribution, whereas here, reignition is in, and I get into the reaccumulation of that push. So yeah, confusing stuff, not gonna lie, confusing stuff. Anyway, that's this. Go sideways here, I get in here. Well, I don't because I'm not home. Then it goes higher, right? Then it would reaccumulate again, flippy here, reignites, maybe some trade over here, maybe some trade over here. This looks like a good trade. I end up not taking that, it's too early. I don't know, man, I don't know. I have to think about this a little bit more. One thing's for sure. If I decide to not trade this, I'm going to filter out so much stuff. So much. Is that ultimately what I want to do? Bro. I'm not entirely sure. That's a problem. Anyway, this ends up being a -1. I mark it as a mistake. Honestly, I would really like to see a bigger reignition. I probably, like, long story short, I probably would not call this reignition. It's just, it could very easily be part of a liquidity grab, and I think I would feel more comfortable if it broke out higher. And the same goes with US oil here then, right? I think I should probably not feel comfortable enough to call this reignition. I should probably wait for something like this and then get into it. Yeah, I think so. All right, well, so this is a mistake. Mistake why? Too early. All right. So that's it for Wednesday. And do I have one more trade here? I do. Wow, okay. So Thursday over here, JPN breaking higher, looks really good, definitely following. NAS 100 pulled back into the rising 1020, definitely looks good here. I would look for a trade for sure. This is reignition and pullback, right? This looks really nice. And US oil, what's going on here? I flip it. Okay, I flip it. Yep, this looks like it could easily continue higher. So, not bad. And I don't fill out any of this, and I take a trade on US oil at 1609. Okay, let's take a look at it. So here I called this a mistake. But here's where I'm having a little bit of an issue, right? I call this a mistake, but I feel like it's the exact same trade as the US oil trade. Although the US oil trade is a little bit nicer and cleaner. Like if I compare this 1 minute over here with this 10 minute, which is exactly the same in this case. I don't know. It's just like, of course, the MU looks much worse, right? It looks very choppy and illiquid. But here it looks really nice. I don't know, man. Whatever. So here we are on the 1000, right? Looks good. Looks like it could continue. Here we are on the 100. Big reaccumulation over here, which leads me to believe that this is a reset and we could continue higher. So let's take a look at the 10 minute. 10 minute, honestly, kind of choppy. So I wasn't looking for any trade in here at all. But after it broke out over here with significant momentum, I looked for a trade. So here we have the stage 2. The stage 2 looks pretty decent. And here it pulls back, right? And as it pulls back, I'm mostly interested in seeing some lows liquidated, which I definitely see. I mean, this low got liquidated for sure, big time. And I'm looking for a diagonal, which I have over here, and I'm looking for a flippy. The flippy, meh. Whoa, what did I just do? Okay. Oh, this is not drawn on Miro. This is drawn in TradingView. I see. Let me see the 10-second over here. Okay. So essentially, so here's the reaccumulation, and I'm arguing that this is reignition, and this is a pullback. I mean, yeah, it liquidated this over here, which is kind of nice. So it could have just fucked off lower if it needed to, right? First of all, I have to say it's a little bit choppy. It is. But even then, perhaps I should have, like, I can see that there is some imbalance over here. It's all coming from here. So perhaps the flippy was over here, and this was just a lick grab, and by no means was this reignition. So was this really reignition? I don't know. Like, there's a big supply zone as well. Honestly, if I was given this opportunity right now, I would not take it. I wouldn't take it simply because this doesn't look too convincing. This reignition is not strong enough, in my opinion. Also, if it was a reignition, it would need to go above a flippy, which it did, but then it had a V-shaped pullback, right? So honestly, I don't like this trade. I would not take it. And I think it's a -1, right? Yeah, it's a -1. Yeah, I'm gonna call this a mistake, honestly. Yep. Mistake. So mistake why? Honestly, this is the flippy. Yeah, that's the flippy. This is the supply zone. Yeah, this wasn't strong enough. Mistake why? Weak. Too early. Bruh. Too early. Okay. And do I have V-shaped pullback? Nope, V-shaped pullback. I'm going to include that because that's a big one that I want to focus on. Boop. Okay, let's put it here, right at the beginning. Okay. So that's it. So 2 trades, 2 of them good, 2 of them not so much. Honestly, I think the biggest mistake by far is the US oil trade over here. That one is just not good enough. I don't like it. This one, questionable. This one, kinda alright. This one was absolutely beautiful. The NAS 100 trade. I loved it. But yeah. One more thing. As I did the little analysis of all of my trades this year, I paid special attention to the V-shaped pullbacks, and I decided, well, most of the wins that I had, like I would say 95% plus, don't have a V-shaped pullback. They have shallow pullbacks, really nice orderly pullbacks, mostly shallow. V-shape, almost never. So one thing that I have decided to do is to just completely filter out V-shaped pullbacks. Like, just don't trade them. The only time when I'm willing to trade it is when, well, even then, I'm probably not willing to trade it, actually. I wanted to say that when it pulls back and creates a stage 1 and then breaks out again, but actually, nah. I like to see, when it comes to pullbacks, right, when we have some kind of, yo, what the fuck? Okay, when we have some kind of resistance level, and blah, 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 and we break out, there can either be a rounded pullback, which goes something like this, right? Or we can have a flagging pullback, which is by far my favorite, something like this. Or we can have a V-shaped pullback, which is like this, which could go, for example, into a demand zone. And then I would argue, okay, so if it creates a stage 1 over here, perhaps then, as it breaks out, I could trade it. But I honestly think that this range should be completely invalidated, and I should just wait for a breakout here. Then it can pull back into the range through a good pullback, and then I can trade it. That makes much, much more sense to me. And that way, I can really filter out a lot of unnecessary price action. And now I know that most, if not all of my wins come from not V-shaped pullbacks. So I should not feel bad about filtering all of this out. So that's definitely a huge, huge thing. A huge thing to include in my system. So don't trade V-shaped pullbacks. Boom. And let the reignition happen, don't trade too early, and filter out choppy Wikipedia. Yep. All right, so let's go over here. And what went well? What went well is that I was relatively patient once again. I think patience is something that I'm still working on and I'm getting better and better at. It's not so much the patience, to be honest. I think it's more about clarity of rules. And over time, as I'm making mistakes, they frustrate me, and I'm trying my best to get clearer rules that allow me to, with confidence and clarity, say, hey, this is not what I want to trade, or this is what I want to trade. Sometimes I still find myself in a gray zone on the edge, and I'm not exactly sure whether this is something I should take or not. And that's ultimately not good. I want to be able to be really, really confident about the setups that meet my rules. So it's not that much patience these days. I don't have the itch that I would need to trade. I'm just really not entirely sure whether the setups fit the rules or not. So as I get frustrated, as I said, I come up with simplifications. One of them I came up with this week is to completely filter out V-shaped pullbacks. That's already going to be a big, big improvement, because I know that every time when I see a V-shaped pullback in the past, I'll be like, oh, should I take this or should I not take this? All of this is going to be filtered out now, so no more of this uncertainty. So now the last kind of uncertainty that I still have is this, like, should I already trade it here or not? Well, honestly, I'm leaning towards allowing reignition to happen, which means that once price is, let's say, somewhere over here, that's when I can trade. This still is too close to the flippy. If it's very close to the flippy, I feel like I should filter it out, because there's a huge risk of it being a redistribution, of it just peekabooing above and fucking off lower. Instead, I would really like to wait for this and then look to get involved somewhere over here. That would be perfect. If I can do that, I think I'm going to do amazingly, amazingly well. So yeah, that's that. So that went well. I was patient. I followed rules, and most importantly, refined some new rules. And what went bad? What went bad was this. This was bad. This was not a strong enough reignition. Weak reignition here. Okay. So what are the results? First of all, this is already all done. Okay, cool. And on Friday, I didn't trade. So let's go into analysis here and go to trades taken. So these are all the trades I took. So overall, I'm up 2.2. That's nice. Plus 2.2 R. And had I traded perfectly? Wait, what? That makes no sense. What? Oh, I didn't make a decision here. Okay, good. Here, this was a mistake. This was a mistake. This was good. Okay, cool. So perfect trade. Had I traded perfectly, I would be up plus 4.6. Plus 4.6 R, if perfect. All right. So, what is there else to say? Let's mark up the kinds of mistakes that I made. I definitely was too early. And I definitely traded a V-shaped pullback. Where did I trade the V-shaped pullback, by the way? What was that? Ah, yeah, it was this, right? Yeah, that's the reignition. That's the V-shaped pullback. Yeah, after the reignition, I just really want to see a short lift sideways or a little like shallow reaccumulation. This was relatively deep and it was ugly, most importantly. But what's even more significant is the fact that this reaccumulation just wasn't good. This whole thing was kind of weird. We can see it here too, like it was a little bit choppy. It wasn't the best. Okay, so I think that's gonna be it. Let me just fill out the forward test over here. Boop, boop, boop. Okay, go here, go to trades taken one more time. All right. NAS June 16. Actually, you know what I can do? I can just put it in here. All right, that's good enough. Taken at 10:51. And it was a BE, I believe. Actually, this doesn't work. It was a BE indeed. So minus 0.2. Next up, let me do this. US oil, June 16th, 1628, 4.8. Stock, June 17th, at 2114. Whoa, what? I took a stock trade at 2114? That's not very good, is it? Ah, that's not very good. Yeah, I should not trade stocks that late. Yeah, that's not good. Okay. And last one was also US oil, June 18th at 1609. And that was also minus 1.2. Okay, so right now I'm at minus 18 RDD. Still chopping sideways a little bit, but that's cool. I don't mind it. So yeah, that was a longer yapping session, but a very, very important one. The main goal of these videos is for me to consciously go over all of my trades and to brainstorm, to figure things out, to coach myself and all that stuff. And that's exactly what I'm doing. And I feel, honestly, I feel good. I feel like the improvements are being made. Yes, it is taking fairly long. It could probably be done in a better way or whatnot. But hey, this is my journey. This is just how it goes. And I feel like I'm refining the edge slowly, and over time, I'm really confident that it's gonna be good. Like, it's getting better and better all the time. And this little experiment that I did, this little um, going over all of my trades and figuring out how much R I could have made had I traded the most perfect way possible, that was really eye-opening. And it shows that if I just if I don't mind filtering out a lot of the questionable setups, I will do amazingly well for myself. It requires patience, it requires well-defined rules and clarity, and every week I'm getting a little bit closer to that. So overall, good stuff. I like it. It's all good. Okay, GG's. See ya.